what's going on in the currency markets at the moment. US dollar, having gone and screeched high over the past couple of years, now looks like it's pretty much topped out. And the question then goes, where does it move to from here? Let's get a view from an expert. Nick Twidale from FP Markets is standing by in our Barangaroo studios. Nick, great to go and see you there. US dollar, oh, how the mighty have fallen.
Certainly has, hasn't it? And yeah, I mean, it's definitely a sell-on rallies environment, and I think we're coming up to some key levels as well. Next couple of months are going to be very, very important for the dollar, and you know, I think it's only a couple of months ago we were talking about it stretching to new fresh highs, but markets turned around and sentiments completely turned around, and you know, it's a sell dollar environment.
Yeah, that's that big move at the back end of the US curve as well seems to be really detrimental to its workings at the moment. So keep a close eye on that. But look, let's go and see how it's going to interact with some of the other G10 currency pairs, starting with our own Aussie battler, which up until recently it hasn't been battling at all. It's been up and about. How's it looking from a technical perspective?
Well, I think it does feel like we've seen a base in the Aussie, and it is battling a little bit higher. I think some of the key things we've seen, obviously we're looking at the big dollar side of things as well, but China, some sort of positive news out of China will always help the Aussie sort of move a little bit higher. And even though we've got a bit of pressure coming on commodities, I think you'd definitely be looking to pick up Aussie, you know, where that sort of trend line comes in, support around 64 cents. And if we see a break, there's clearly a little bit of resistance around that 68.50 level. If we get a break higher, I can't see any reason at the moment for the Aussie not to knock back up to sort of the low 70s. But having said that, we've then got a few issues domestically that we could start to see some recessionary pressures coming in, and that could hit us later in, I think, in 2023. You can see there on the longer term chart that we've got a lot of sort of like congestion in these high 60s. I reckon the next couple of months is going to be fairly crucial for the battler, and it's going to be interesting. I think for most of the currencies as well, in the majors, we're in a little bit of a wait and see until next week's Fed meeting. We'll get a little bit more clearer indication. We're going to get hikes from the Fed, but if we start to see that slowing in the hikes, then maybe we're going to see some extra topside potential for Aussie and some of the other currencies as well, to be honest, Gay.
Yeah, Nick, that's really interesting as well when it comes to that China side of the equation. Just from a sentiment perspective, we know that the reopening hopes have been a really powerful force there over the past month and a half. How much do you think that is now baked into the price action, that we're going to go and see some kind of emergence and return to normality in China next year?
I don't think we've fully priced it in currency terms, and especially for the Aussie, which is a great proxy for the China situation. And always is. I think we really need some confirmation out of China. If we get that, I think that's what's going to open the way for the Aussie to move higher up into those sort of to have a 7 as a big figure rather than the 6 which we were experiencing recently. Alternatively, we've got to keep an eye on the news. If they pull back and we do get and they come back into a very sort of like zero COVID environment, then we could see the Aussie fall off. But it does seem that we're going to see China open up, and that's got to be inflationary still, which brings its own issues for us. But for the Aussie, I think it's just going to lift it higher.
Yeah, absolutely. Look, at the moment, when I look at some of the footage around there, it looks like the big queues for testing have been replaced by big queues for medicine at the moment. So that goes and begs the question as to how people will interact in the environment where it's so new compared to what we've seen over the recent years there in that country. So that's going to be one thing to keep a close eye on, particularly for the fortunes of the Aussie and, of course, the Chinese yuan. Let's have a look at the euro, because when it comes to the big dollar, the dollar index is a big weighting there for the euro, over almost 60%. On a technical perspective, things look much better than what they were only a few months ago.
Yeah, they do. And as I said, I think we were talking a couple of months ago, and it looked like euro was heading for like an 8 on the big figure, and we're back up around 105 at the moment. It's topped out nicely on that trend line resistance around about 106, but it's bounced nicely off the moving average there as well, and it just feels like the market wants to buy. It wants to buy euro, and as you said, I think it's 57% of the dollar index. If we break above that sort of 106 level, and this is a longer term chart as well, you can see that it opens up the way to move back up to 110 fairly easily. And once we're there, we're going to have to look at what's really going on in Europe. We're going to be looking at the data there, and once again, I have to go back to it. We're going to have to see how the US is going, and we'll have to see what the Fed gives us next week. I think we're waiting for that Fed to see any breaks in the big currencies. But if we do see a little bit a more dovish Fed, then I think it opens up the way for 110 in the euro. And I'm aware that 2 months ago I was probably talking us down to 85, but that's how quickly the markets are moving at the moment, and that's sort of the environment we're in, and we've got to trade what we see.
Yeah, that yield collapse again has been so instrumental.
Exactly.
That differential is starting to undermine the other dollar. Let's go and talk about yield differentials and what the perfect currency pair that's been demonstrating that the inverse relationship is the dollar yen. Now, it wasn't that long ago the Bank of Japan was having to go and step in and intervene in the market for the first time in a couple of decades ago and stop the yen from just unraveling. But now all of a sudden it's screeching higher. Where does it go and move from here?
Well, I think dollar yen's very interesting now, and you're starting to hear talks of a change in direction from the BOJ, which is massive for us. So anyone that's been trading dollar yen for the last forever has been stuck in this sort of like zero interest rate environment from the yen. Now, talking to people in Tokyo and like some of the big banks over there, now they're very much in a sell rallies mentality when, and since we got that break, and this is the longer term chart there, since we got that big break that took us through 116 and it took us all the way up to the 150s, that mentality has always been buy dips and it ties in with what we've got from the Fed. But since we've capped out now, the guys over there, they're looking to sell rallies, and I think there's people talking about us getting back to 115 fairly swiftly. So I think the great thing for currency traders is we're going to see more volatility, and it is behaving very well on the charts.